Hey everyone, we are here for our next talk. It's actually going to be very useful. We have Yuri from Anchorage. He'll be doing a talk on crypto accounting systems, how to manage your books correctly. And Yuri, would you mind introducing yourself before you start?
Yes, thank you very much. My name is Yuri. I currently work for Anchorage, which is a digital custodian. We also do things like brokerage, lending, staking, a lot of other crypto native services. And before I was at Anchorage, I spent about 2 years at a crypto quant fund. So I did a lot of trading there before I came to Anchorage. And then before I was in crypto, I spent about 10 years at Goldman Sachs as a trader and a few other roles. So over the last 12 years, well, 14 years really, if you include the Anchorage experience, I've done a lot of accounting. I've seen kind of what can go wrong with it, how engineers can be very helpful to accounting, and that is what I'm going to talk through today. Now, if anyone has any questions during this chat, feel free to ask away in the app here. I'm going to kind of go through a little spreadsheet that I built so people can kind of see what I'm talking about as I talk through it. And the reason I think this is an important topic for this audience is, it's very difficult. I do a lot of time spending time helping my firm recruit talent. And one of the toughest things to find out there is a person that has two types of skills together. That they're really good at computer science and they're good coders and also understand accounting really well. If you go back to schools, computer science kids usually don't do many accounting courses, and then people that are, in accounting programs hardly ever learn any coding. So those two skills together are very valuable for companies, and that's why places like Citadel, Virtue, offer quite a lot of money for folks who can do both of these types of skills. So let's jump into it. So why is accounting so important? So pretend you're a hedge fund, right? You have a lot of quant talent, you have a lot of engineering talent, you have a lot of research talent. All these people can get a lot of good trading ideas going and otherwise be profitable. But if the accounting is not set up correctly, you will have a lot of problems where all this research and all the quant talent and all the work can kind of be more or less worthless if the accounting is not up to par. And here's what I mean. So what we have here on the first screen that I'm showing you here is just a simple ledger of balances, right? So up here, we have basically US dollars going day by day. And it kind of shows you that every single account that, for example, I may have as part of a trading desk and how much money is in here. So there's zero in here, $450,000 in here. It kind of keeps going. And then if you keep going to the right, I'll do the same thing with Bitcoin, and it'll show you how much, for example, Bitcoin I may have in certain accounts. And the idea here is that if any of these numbers are incorrect, I may be trading off the wrong positions. Like, for example, if I have, 10 Bitcoin less than I actually do, I might get a signal that says, hey, you need to buy 10 Bitcoin. But because the accounting is incorrect, I might buy that 10 Bitcoin incorrectly, and now I have 10 too much, which introduces my company to risk, right? So it is of prime importance that all these numbers are correct for the trader who is there to make decisions based on what his positions look like, right? Now, in accounting, there's basically two principles, right? There's the assets you have, and then there's what we call the accruals, right? And all an accrual is something that is either owed to you that you don't have yet, or that you owe to somebody else that you haven't paid them yet, right? So, for example, this is why some of these negative numbers are coming in here. They're just accruals. All it means is that somebody owes me, or I owe somebody $446,000 here that I haven't paid out yet. And how do these numbers kind of get in here, right? When you don't have any engineering talent, this is kind of a very manual process. I'll have to log into all my bank accounts. I have to log into all these, USD vaults that I have at exchanges, and to go one by one and every single day write down the amount of dollars I have. Now, when you have an engineering resources, these things are basically, you can build in APIs, figure out how to pull these numbers kind of every day, every hour, every second, if you will, and have these things kind of basically be live, right? So it is important to understand like how to build accounting systems so that you can plug into the different banking providers that you have, the different crypto exchanges, and use their APIs to really build these things in, right? Now, let's talk a little bit about the accruals. So if we go here to what we call the trade blotter, and here it basically every line is a different trade, right? So it's pretty basic, right? You have your timestamp, you have the counterparty that you traded with, whether you buy or sell, what the assets are. For example, this one here, I bought 3.44 Bitcoin for US dollars. Here's the price, here's the amount of dollars. And then what happens is when you make a trade, right, your balances don't exactly go up or down by the amount that you made the trade by, right? The accrual starts to happen. So after this trade is made, you basically have to say that, all right, well, somebody, since I bought this Bitcoin, somebody owes me this Bitcoin. So my positions have to reflect that I have now 3.44 more Bitcoin in my balance sheet, although physically that Bitcoin is not there yet. Okay. It's kind of like, when you make a purchase on Amazon, you order like an umbrella or something. Now, you are now an owner of an umbrella, but it'll take 4 days for it to ship to you. So you don't actually have it, in your possession. And same thing with Bitcoin. You buy it from an OTC desk. They have to actually send it to you. And on the flip side, you now have you owe $35,000 here to the deep sea mining company. But in reality, this money is still there, right? It's in your bank account. You just haven't sent it yet. So what you have to do is you have to basically program your balances to view these accruals, to basically say that here, although I have all these balances here, my Bitcoin is actually, 3.4 less than what my total balance shows. And my USD balances actually have about $34,000 or $35,000 more than I really have to spend. So where the engineering portion comes in here is that when a trade like this is made, it needs to be automatic to update that you no longer are the owner of these $35,000. Back in the day, and when I say back in the day, I mean like 2017 when crypto systems were very kind of infantile. I would have to literally update that, hey, like I owe this to somebody. And then I would check my bank account and then check my ledger just to make sure that when the Bitcoin comes in or when the dollars get sent out, and then I would update all these things kind of manually. And now, what engineers basically need to do is to make these processes more automatic so that proper positions are being updated. Because on a busy trading desk, sometimes when everything's manual, things can be overlooked. And again, we're reaching that problem I talked about earlier, where your positions are incorrect and the trader makes incorrect decisions based on these positions. So this is kind of the two mainstays of the accounting systems. Do I have any questions just so far before I move on to some of the more kind of other topics here? All right, easy audience. So let's keep going back to this exchange balances tab. Now, for example, like let's say, this trade that I did here is 3.44, but I, on accident, for example, did something like this where it's like 34.4, right? Which is called, fat finger error. What you need to do basically to make sure that there's no fat finger errors is you need to design proper checks and balances, right? So, for example, like in this very basic Google Sheets system, I have this big cell up here, right? That kind of shows me that, hey, I now have $2,388, right? And as you can see, like, for example, if I did incorrectly put something in, let's just, for example, like go to a Bitcoin amount, and instead of 1.64, I accidentally put like 16.4, right? So I can easily tell that there's something wrong because now my what I call the P&L cell, which is your profit and loss, jumped from about 2,000, which is where I was expecting it to be, to like 161,000. So obviously I can tell that something was entered incorrectly. So you can easily see that once we fix that, it goes back to normal. But the point here is when you're designing accounting systems, it is incredibly important to have checks and balances to make sure that there's no errors and things like that. And as you can see, I kind of wrote this formula here. It's pretty basic, especially for some of you guys that work in Python and some of the more kind of advanced coding systems. But this basically checks that it checks every single balance cell that I have. It multiplies things like Bitcoin and other balances times a certain price, and it kind of gives me this P&L that just by glancing at it, I can tell if everything is balanced or whether I need to spend some time looking for errors. So whether you design the system. And by the way, the system I currently use is not in Google Sheets. This is just for example purposes. We do have kind of something that we run a database that's kind of Python based that does a lot of reads through a front end system where all the stuff shows up. But the idea is that when you're working on accounting systems for your company, it's very important that you built in very good checks and balances so that incorrect entries can really be caught really quickly, because if they're not caught fast, they kind of build on each other, snowball, and then you have all sorts of other issues. So the reason I kind of have this big tab here is because there's a lot of USD accounts and there's a lot of kind of Bitcoin accounts. But then, you obviously can have other currencies that you use, right? And we need to keep track of all that stuff too, right? So, when you add up kind of, everything from the USD table, everything from that Bitcoin table, then we kind of go through some of these, other currencies, for example, XRP, Ether, and some of these stable coins over here. And then eventually you have to kind of see what your dollar value of your desk is, right? And this is something that every trader that you'll ever work with, they'll always have these kinds of numbers where they would check these at the end of the day to make sure that the amount of money, and by money I mean the net worth of all your fiat dollars, your kind of stable coins, any other cryptocurrencies, or any other securities that you may have, are worth just about as much as you think they are. So right now, as you can see, it doesn't change too much. Our trading desk has about $207,000 worth of assets every single day. But if this number was if you were expecting it to be around $200,000 and it was either 2 million or like $5, obviously there's some troubleshooting that you need to do. And sometimes when you do the troubleshooting, it's always good when it's just an accounting error. But sometimes what ends up happening is you actually have a trading error where you actually traded too much or too little, or didn't get the right price on it. And then you can really catch yourself by having these types of cells. And what this really does is it takes all of my items here and it multiplies them by kind of daily rates that I'll show you guys here in a little bit. Then it's also very important to calculate things like profit and loss, right? So every single day, you should have a pretty good idea of what your daily P&L is. And then obviously cumulative is a good factor as well, right? So kind of over here, I put in all these numbers. They're all fake numbers, obviously. But sometimes you'll have random days where, your P&L is a lot bigger than kind of your average, right? And it's really important to kind of be able to use these types of systems to do a lot of kind of what you call accounting forensics, right? Now, this is easy here because, I designed this sheet to be pretty simple. But there should always be a way when you're designing accounting systems to be able to, see a number like this, for example, and figure out, well, why is it that this number is negative 1,428? And it's important to go back to the formulas and kind of just see where all these numbers come from, and so you can kind of explain why it's happening. Like, for example, a trader might ask you, right, well, why am I down for $1,400 today? Well, if you go back to the numbers, you could probably tell them that, okay, well, we have this big, ZRX position, and it moved down X amount of money. And then we also paid like $1,000 fee to a bank or something like that. And this is how we came up with negative 1428, right? So you should be able to answer this type of a qualitative question by doing some of the digging of what exactly makes this sell what it is. So you can come up with more of a qualitative story for the trader. Because a lot of times, especially if you work for a much bigger place, with a lot of different employees, a lot of different departments, the traders and the portfolio managers won't always know exactly like how to do some of this analysis themselves. So the engineers who are responsible for kind of building and maintaining these accounting systems, you should always build them with a thought process in your mind that there will be times where you will have to go back through the numbers of any kind of output cell and really figure out like where the issues may be that you that is causing any type of a number that may look off or maybe correct. It's just you just need to explain to it how it came to that number. Okay. So one other thing I wanted to show you here in the trades tab, in crypto trading, it is very important to always book all your transaction IDs that are published to the blockchain. So for the purposes of this presentation, I made some of these kind of cells over here where it shows that, for example, let's keep using this trade down here as an example where deep sea mining, or let's just do another one. Let's look at this guy here. Let's just highlight it so we can see it pretty easy. So Stingray Trust here has decided that they trade Bitcoin for dollars, and then we can kind of see here how did this move, right? So we can see here that this was sent out of something called, I guess, the Omni account, and then this is the on-chain kind of the blockchain transaction ID that shows that this 0.633 etc. Bitcoin was moved from looks like we sold it to these guys. So it moved from our account, trading account, to this Stingray Trust client, right? So what you want is that this ID would be very interactive, right? You should be able to click it, and if I'm sure most of you have seen what a block explorer kind of looks like. You should be able to click into it, and it'll give you like a timestamp, like what the block number is, what the gas fees may have been, and things like that. So one of the things that I don't have in front of me here, but in my live accounting systems, I can always press on something like this, and what my API does is it pulls a lot of the data that's associated with this transaction ID. And it kind of just tells me, what those attributes were. What were the gas fees? How long did it take for this block to propagate? Like how many confirmations did it take before it settled in the client's vault? And things like that. So it's very important to kind of build these things in. Now, here I have an NA and this little note that says, hey, the USD was netted for these 3 trades, right? So what this means is that the dollar amount that I sent over wasn't just for this one trade, but as you can see, like Stingray Trust did 3 trades here, right? So a lot of times I will put especially if they did them on the same day, which seems to be the case here, I put all these dollar amounts together, and I sent them in the real world as one single bank wire. And then in the accounting systems, it's very important for me to be able to trace that bank wire and see which trades they associated with. So when you're building out your systems, it's very important to build a lot of these links that net these amounts together. And the same thing can happen on the blockchain as well, right? For example, you did let's go back to a Stingray example. Looks like they're trading BTC the entire here. They're just selling BTC throughout the day. So let's say they sold these 3 amounts together, which is about 4 BTC. And then at the end of the day is when they settle, right? They send me all 4.1 of this BTC at the end of the day. And again, your job as somebody who programs accounting systems is to make sure that this blockchain ID, that let's say it nets all three of those trades, is linked inside your accounting systems to basically include all three of those trades and basically let you know that, hey, this ID, the reason it's 4.1 is because it takes trade 213, 214, and 215 together. And then vice versa, if you're looking to see, well, where on the blockchain can I find this like 1.85 for Bitcoin that was being sent? Because I can't find it. Well, in your accounting system, you have to basically, once this trade is clicked on, it says that this ID here was linked to that transaction ID that I just showed you, that it also includes these two as well. And the trader and the accounting people and the audit people have to have access to this information and kind of very easily be able to navigate. So, as an engineer who designs these kinds of things, it's very important to make sure that everything's very clear and it's easy and things are linked together, so it's easy to kind of figure out what is what. Right? Now, to finish this up, and I realize I'm kind of running out of time here, I wanted to show you guys some of these margin pages. So, for example, like a lot of trading desks that make markets, they allow their clients to do the kind of margin trading and basically do borrows and sells, right? So, margin systems, for those of you who are not too familiar, I'll give you kind of like a quick 30-second overview, is, if you only have, like, let's say Bitcoin's worth $10,000 and you only have $10,000 on the spot market, that means you can only buy one Bitcoin, right? But with margin, what you can do is you can deposit that $10,000 as collateral, and then let's say I'm going to allow you, 3 times leverage. With that $10,000 deposited, I technically can not sell you, but give you exposure to 3 Bitcoin instead of just 1, right? So that's kind of what margin systems do, is that they allow traders to employ leverage. And when it comes to accounting, it's very important to kind of book the stuff in, book all the collateral that's in here. For example, like let's say this pufferfish client, he deposited 450 Bitcoin. And as the Bitcoin price moves up and down, this collateral has to be worth more than 100 basically percent of what the client is kind of borrowing. And if it goes down below a certain amount, which you can, the trader usually negotiates with the client, there's something like automatic liquidations. So what does this mean from an engineering perspective? From an engineering perspective, it basically means that you need to design a system that does several things. You need to pull in a price for this Bitcoin. So, like, how much does 450 Bitcoin worth? Well, I don't know. I guess my example was 10,000, right? But I need to basically have that update every minute, every 10 seconds, every second even. So you need to build basically APIs that bring in the pricing sources into your system. Now, is one pricing source enough? Maybe, but what if that pricing source goes down, right? Well, then you might want to have 2 pricing sources or 3 pricing sources, right? If one goes down, then you can have another one kind of fill in, right? Because if one fails, then the system will think that this 450 Bitcoin is worth 0, and then it'll start triggering automatic liquidations, which we definitely don't want. I mean, for you crypto guys, I'm sure you've seen what happens with BitMEX when there's rolling liquidations. Basically tanks prices, liquidates a lot of people, and a lot of people lose a lot of money. So it's very important to have this stuff kind of made correctly. So when you do have like 3 pricing sources, what does that really mean? Like, you need to build in a lot of different things that make sure that those pricing sources are reliable. So you can, for example, design collateral bands, right? Like, if one price says 10,000 and another price source says like 9,500, and there's a $500 difference, you may want to build in like a little percentage that says, okay, well, if these 2 prices are far enough from each other, maybe one of them is incorrect. And if you have 3 pricing sources, you can build correlations between every single pair And you can kind of see that if one of them's wrong, the other two should technically be right. So that's kind of a good way to build pricing sources into your margin systems to make sure that there's no incorrect liquidations. All right. Now, let's see here. Where are we here? And another thing that you want to build through is, for example, if you do have an automated liquidation system and the collateral ratios go down to below a certain level where you do have to kind of sell a lot of your assets, it all happens automatically, right? Like the engineers will basically build in a system that says, okay, the collateral ratio has reached this liquidation amount, and that triggers orders to go to all the exchanges you're connected with to basically sell off those assets. And when it comes to accounting systems, it's very important to build in automatic kind of liquidation reports. So once you sell off Bitcoin on an exchange, you should automatically have like things like this to populate trades that happen on exchange. So you can see that, hey, I sold, certain amounts, and that fulfilled the orders that were being sent as a result of a liquidation. And obviously you want to have just like things like this, pretty basic, but you definitely want to have, address repositories so that, your accounting system can also kind of show where things need to be sent. There's a way to build in transfer APIs through your vault so you can send assets wherever they need to be. And these things all need to be associated with different accounts that your debt trading desk might hold. So there's no questions. If there's anything else, feel free to pop that into the chat. But hopefully this was useful to some of you guys. And the most important thing, I guess, to get out of this is, before any trading desk can really launch, or if you're working on a startup hedge fund, a lot of these accounting systems are important to build out before you really even start trading. When I joined Galois Capital back in 2018, we actually spent almost a full year building out accounting systems before we even took any investor money. Because, one thing is, like I said in the beginning, your positions can be completely off. And two, you're going to have audits, and you're going to have, basically regulators and accountants kind of looking through your stuff, and they want to make sure that everything's correctly booked and that the positions are proper. So I'll stop there. Again, hopefully this was useful to some of you guys. And if there's no questions, I hope that everybody has a great afternoon.
So I have one question. What are some good resources if people wanted to learn more about crypto accounting systems?
One of the reasons I actually wanted to do this specific topic is because, unfortunately, there really isn't much out there. There is a lot of information out there for like traditional accounting, but because crypto moves so fast, and because there are like block explorers and things like that out there that aren't really ever been written about in academia, it's really difficult to kind of do it. But what I would start out with is just really understanding like the basics of balance sheets, income statements, and most importantly, accruals, which I think you can read some of the more traditional materials on, that you can pretty much find anywhere online. But I don't think there's anything that I came across that are crypto specific.
Awesome. Thanks, Yuri. I think we are good in terms of time. We're going to transition to our next talk now. Really appreciate you taking the time. This was really useful.
Thank you very much.